Today's short session on IFRS 5 is actually the how the loan current assets and for sale and their discontinued operation. Um, this standard is one of the presented standard that guides how we report assets and parts of the business that are about to be sold. Tells us how to account for assets that a company plans to sell and how to present the discontinued parts of the business in the production statement. We will first understand what IFRS 5 means, and we have understood it. And now we will move on for next question is when are assets and for actually sale. So, according to IFRS 5, unauthorized asset or a disposal group is classified as held for sale when two main conditions are met. I have written down there four conditions. You can say two are enough for this, but four are make it matter. One asset is available for immediate sale in the current condition. It's available and its current condition. And the second one is the sale is highly probable, buyer identified, and the management committee. The sale must be highly probable, it meaning the management is actively looking for a buyer and the sale is expected to complete within 12 months. Here, the sale is expected within 12 months. So for example, we have the machinery and we have to sell this machinery. And we have an buyer identified, which is XYZ, someone else. And we have to sell this inside the 12 months. Keep in mind that once the asset is classified as held for sale, that appreciation stops because assets value will now be recovered through sale, not through use. No further appreciation of the classification. Okay, keep in mind, guys. So now I will go to the Excel and I will show you how we calculate it and further explanation of this. So here, our Excel sheet, we have a small classification table there, and then we have three assets. It's machinery A, and vehicle B, and the furniture. And available for immediate sales, yes or no. So we will put there, and I have just named their formula, held for sale or not held for sale. I told you that true immediate, I mean to say immediate sale is one condition and the second one is should be sale highly probable. One of them is done and the result would be not held for sale. If both are Y, the asset is automatically marked for sale, otherwise it shows not held for sale. For example, machine A meets both conditions here and it's held for sale. Vehicle B fails one condition is not held for sale, and furniture again meets both conditions and it's also held for sale. The gain and red formatting, let's make it again no. You will see that's not held for sale. Okay. So the green and red formatting helps us visually identify this classification quickly. Now we go to the next. It's carrying amount and fair values. Let's go to sale. Carrying amount is actually under IFRS 5 when asset is classified as held for sale should be measured at the lower of its carrying amount. Fair value less cost to sell. For example, there I will enter some data. Suppose machine A has a carrying amount of 2,000 and fair value less cost to sell or is you can say 45,000. The result is in the loss of 5,000 actually, which will be recognized immediately in the income statement. Now, if furniture has a carrying amount, let's there's our information. Yes, furniture has a carrying amount of 30,000. You can say and fair value less cost to sell of 35,000 rupees. Okay, so here we have 5,000 of gain actually, but we don't recognize aggregate until it's actually so. But we know that it's held for sale. Okay, you can again sell for sale. So this rule ensures that assets are not overstated. The financial statements they appear at their realistic recoverable values. So this is very simple explanation to you. And if you also want to understand it according to the visualizations, I can also add some discontinued operations as well. We have discontinued operations as well. The second part of it as is the discontinued operations. Actually, a discontinued operation is component of a business that has either been sold or classified as held for sale. It represents a major line of business or geographical areas. IFRS 5 requires that the result of discontinued operations are shown separately in the income statements below the profit from continuing operations. This separation actually helps users see which profits lead to ongoing business and which come from operations the company has entered. For example, here I have the plot X, which is discontinued, and is 30,000 profit will appear on a separate line in the income statement as profit from discontinued operation. And similarly, the division Y continues, so it's usually stay under continued operation. And that's how this distribution improves transparency and comparability for investors and analysts. So hopefully you have understood this IFRS 5, which helps ensure the financial statements tell the real story, which assets are staying and which are going, and how each part of the business is performing. All the new dance on it's never the gains will never recognize immediately, and the loss will recognize immediately. We should have to be strict while recording the losses, and when gain should be recorded actually when it is been realized. So thank you for watching and learning. I hope this clear walkthrough and